Welcome to the Pathfinder Legacy Podcast, where we help farmers, ranchers, and business owners create a seamless transition plan for the future. From retirement to ownership transfer, we protect what you've built and guide you every step of the way.
Hello, all. Welcome back to the Pathfinder Legacy Podcast. I'm your host, Heidi Olson, and today I have a guest with me, Cory Wheeler from Wheeler Accounting out of Sidney, Montana. Cory is here as a special guest today to talk about those things we need to think about as we enter into the end of the year and we start talking about tax season. Welcome, Cory.
Thank you, Heidi.
Why don't you go ahead and tell our listeners a little bit about yourself and your accounting firm?
For me, I grew up in Fairview, so I grew up in a rural community in small town Montana. And graduating high school, my thoughts were, I don't know what I want to do. I know I don't want to work in an office for the rest of my life. So I also don't know that I want to spend $70,000 to find out I don't want to be an electrician. So instead, I joined the Army. I spent 6 years flying helicopters around all over the world. And I enjoyed that, but it made me sit down and think about what was really important to me. And what was really important to me was coming back to the rural community, coming back to the place where you bump into people at the store and you know them by name. You're not surrounded by strangers all day, every day of your life. These are our family. These are our friends. And so I knew I wanted to come back to this area. I worked with my dad. We have a farm north of town there. And I worked with him for a short period of time, but we're so small that it wasn't enough to support us. So I had to go find another job. I went to school to become an accountant with the idea that I could do taxes during the wintertime and do farming during the summertime. It was a great concept, did not really work out so well. There's a lot more to accounting than just taxes, as I have found out. And I found out that I really enjoy it, and I don't mind being in an office because it gets kind of hot out there sometimes, and the climate control is awful nice. But that's my story. That's where I come from. So I have background in the military. I have background in farming. I have background in accounting. And to this day, I still do a lot of farming. I have my own place. I also help my brother on his. Not as much as I would like to, but that relationship is still there. That focus of my life revolves around agriculture, just like yours does.
Okay, well, very good. So you've got a lot of background and you're still in it, arms deep, if you will, with helping your family and so forth, and still very apprised on what's taking place in the tax world as well as the agricultural industry. So, Cory, with that, there was a lot of changes that took place in 2025 with the administration and with legislation. Why don't you talk about what do you really see as some of the biggest changes, what we want our listeners to start thinking about to prep for their year end?
There's quite a few changes that happened. The one big beautiful bill was released in July of 2025, and it changed a lot of the things that were temporary from the Tax Cut and Jobs Act and made those permanent, but it also added a few things. There's a few things that's going to affect people other than agriculture, but it could affect you as well. So I thought we might start with those items. One is the tax on tips. And so the way the tax on tips is going to work is you're supposed to receive on your W-2, there's a box that will tell you how much your tips are going to be. Those tips are subject to Social Security and Medicare taxes, but they will be tax-free for income tax purposes. So what I'm seeing in the industries out there is that when we have these credit card, when you tip somebody by credit card, they still have to pay the Social Security and the FICA taxes, but they don't have the income associated with that. Problem is with both the tips and the overtime, the IRS has released a letter that says we're not going to require employers to tell you how much that was. So there's nothing that's going to be on your 1090 or your W-2s for 2025 that says we can take these as tax deductions. There's going to be nothing there that the employers aren't required to tell you that. So I implore every one of you to actually bring your final pay stub, hold on to that December pay stub. Hold on to that and take that to your accountant. So your accountant could go through and say, hey, here's your tips, here's your job. You qualify, you don't qualify, here's your overtime. You do or don't qualify. I mean, we won't have that information unless you bring in those pay stubs. And we've never really asked for the pay stubs in the past. So this is kind of one of those changes that's going to happen at least this year. In 2026, they've already changed the forms that requires them to annotate all of this in 2026. So you can get those tax deductions in 2026, but we can't get them for you in 2025 without that pay stub. So keep that in mind as tax season comes to roll around.
Okay.
Tax on overtime, I kind of have split feelings on this because there's some benefits and disadvantages, especially for farmers. So the benefits are again, we have to have the pay stub in 2025. On 2026, it will tell us how much there is. There's also income caps. So if your income is above a certain level, you get to claim less of your overtime as tax-free. When we're talking about the tax on overtime, what we're talking about is that extra 50%. So if you're paid time and a half, your time is taxed as normal. It's the half that we get the deduction on.
Okay.
With that being said, for farmers, it's not a requirement for farmers to pay overtime in a lot of states. And if you're not required to pay overtime, then even if you opt to pay overtime, you don't get paid for that. Your employees can't take that benefit. So basically, any farm employee that has time and a half, they might not qualify for the overtime limits, depending on how your state laws are written.
They're not required to pay overtime?
Not generally, no. No.
Okay. Is there any sort of regulations on that? I think, when I was working as a W-2 employee, there were DOL regulations and so forth on that. But for egg producers, there's no consequences or anything for that part for overtime.
Right. Yeah.
Okay. Very good. I'm going to step back a minute just on tax on tips. So really the best bet for those working in the service industry that are getting tips, probably take them in cash versus having them on a credit card. Maybe we don't want to advise that way, but
you are supposed to claim your cash tips as well as your credit card tips.
Okay.
By IRS regulations, you are supposed to claim those on your tax return. If you claim those on your tax return, you will be charged FICA taxes, so Social Security and Medicare taxes, but you'll get that back. You won't be taxed on the income part of it. You will get taxed on the FICA. So if you are one of those people that receives significant amounts of tax tips and you've never claimed them in the past, and you continue that practice, then nothing will change for you. If you start to report those tips as you're supposed to, then you will pay more in taxes because you have to cover that FICA.
Okay.
Is that clear? Did I kind of...
Yeah, nope. That sounds clear to me. Just so that way our listeners out there, if they think, well, I've always been taking my tips in cash and now, you have more and more of their handheld credit card machines that they're taking their orders and so forth on and payments at the same time. They could tell their table, whoever they're waiting on, say, well, just pay me in cash. And I don't know if that would happen out there, but I could just see some of the college students or what have you. I don't want to pay tax on that. So just pay me in cash tip if you want.
And so you're right. Technically, there is still a tax on tips.
Doesn't matter what form. You're supposed to claim that. Yep. Okay. All right. Well, thank you for clarifying that. So, all right.
Another thing we can talk about along the same lines as W-2s is 1099s.
Okay.
So in 2025, our requirement for 1099s is if you make more than $600 in rent or non-employee compensation, then you need to send a 1099 out to the person that you paid. You need their social security address and name And most accountants will fill these forms out for you, or you can do them yourself. In 2026, the way that changes is instead of $600, it gets increased to $2,000. The $600 was created back in '86, and it's never had an inflation adjustment in 30 years.
Wow. I did not know that. It's good to know.
So they're finally increasing that amount so that, because it's a little cumbersome for every $600 payment to send out a 1099. And so that's going to be something to make life a whole lot easier for a lot of us going out there in the future for 2026. But when we have these things like rent payments or you're paying the custom harvester, we really need to be sending 1099s out to those individuals. The penalty for not filing a 1099 when you should be is $295 per 1099. So we want to make sure that we get those forms filled out and sent in.
Right. Very important. Cory, you and I talked about this a minute ago, but before we got on the air, one of the things from my past experiences, I saw so many of the egg producers when I was working in the trust department that were our cash rent tenants. I would say there was probably a handful of them that would do 1099s, but it is so important to make sure that they get those 1099 miscellaneous sent to their landlord for any cash rent that they're paying. So don't skip on that. It's important. And it's as easy as you can go on to, you can either have your accountant help you with that, or can you go to the IRS website and complete the forms there? Because I don't think that there are hard copies anymore, but correct me if I'm wrong.
You can request hard copies, but there's a limit. I don't know the number off the top of my head, but you can only file, say, 10 paper copies. If you have more than 10 1099s, then you're not supposed to use the paper copies, but you can specifically request those from the IRS.
Okay, very good. And then if you were doing paper copies to do the electronic version, can you do that right through are you familiar with that part?
I am not
IRS
familiar
website?
with that part.
Okay.
We have a program to help us file them so that we can file them electronically. Okay.
And that's a service that you provide for your clients, or if someone came in and wanted assistance with filing 1099s in preparation, your office can help with that.
Yes. Yep.
Okay. Very good. All right. Any other common pitfalls or anything that you're seeing on 1099s that our listeners need to be aware of?
I guess one of the biggest pitfalls right now is, should I be paying somebody in 1099 or should I be paying them a W-2? So a W-2 is for wages and a 1099 is for non-employee compensation. So a W-2 you give to your employees, a 1099 you give to someone that is not your employee. And the IRS is starting to crack down on this, saying what is an employee. And there's a lot of different things, a lot of different mechanisms to determine this. But what I'm seeing a lot in the farm industry is we're misclassifying those quite often, pretty regularly. And there's actually a 10-point test to go through and determine, is this person an employee or is it not an employee? And there's certain aspects. You look at all of them all together and then make a determination based off of that. Certain factors are, is a worker providing their own materials? So if you have a custom combiner come in and run their own combine, that would be a 1099. If you have the neighbor down the street come in and run your combine, now they're not supplying their own equipment. So now is that wages? And then there's a very good argument that at that point it is wages. We still send them 1099s, but the question is, should we be? A few of the aspects is whether you provide your own materials, whether you're told to be here at a certain time and work these hours and then you're done, or can you come and go as you please? That's an indicator of whether it's an employee or a contract labor. If you're paid by the job, that's an indicator that you're a contract labor rather than paid by the hour.
If you're contract labor, Cory, then how does 1099 for contract labor? Okay.
And employers like to pay people 1099s because then they don't have to cover the workman's comp, the unemployment, half of the Social Security and Medicare taxes. Mm-hmm. Mm-hmm. The employees want employees go back and forth, but a lot of times the employee, well, they have to cover all of the Social Security and Medicare. So instead of normal employee would pay 7.65%, you'd have to pay 15.3% if you were a contract labor.
Mm-hmm. And that's
so
something.
That's the pull back and forth.
Yep. And that can be laborers or are not paying attention to that. And then they don't reserve funds at the end of the year. I mean, they could be setting themselves up for a tax bill.
They can have some significant tax liabilities. Yes. Yep.
Yeah. So, and you said that's 15, they should be withholding 15%. Yeah. Okay. So something.
Another difference between employees and contract labor is contract labor has tax deductions. So you can deduct your cell phone, you can deduct your internet, because you can't really have a business these days without those two crucial elements.
Okay. How detailed do they need to get on making sure that they're tracking all those deductions? Should they keep receipts, or can they just keep a list of what they paid through the year?
I recommend that you keep the receipts, but provide your tax preparer with the total summary. So on my operation, what I do is every time I have a receipt come in, I stick it in my calendar. It's one of those calendars with a little pocket, and I throw the receipt in there all year long or all month long. At the end of the month, I rip that out and I put it in a total. I never look at the receipts ever again. But if the IRS were ever to come audit me, then I could go back and say, here's all my receipts. Which one do you want? Because I have to dig it out based off of the month, because they're in no order other than by month.
Okay. Yep. So makes sense.
Generally speaking, we won't have to actually show the actual receipt ever again. But just in case we do, I do recommend to hold on to them.
Okay. Yep. Good advice for our listeners. Make sure that you have that paper trail if you ever get audited. And how far back can the IRS go on what have you seen for audit trails?
Most audits are 3 years, but they can go back as far as 5. But if they identify frauds, there's no limit on how far back they can go.
Okay. Good information. One other question I have, Cory, on those employees as you're paying them, and oftentimes we have in our farming operations, we may have family members that are helping alongside the owners. And if they were to pay them in the sale of commodities and so forth, do you see a lot of egg producers doing that as well? Maybe it's harder with livestock. I guess you probably still can do that. You've got the brands are registered, but when they sell that check, the cattle check can be issued in the name of the family member and use that as wages. What is your thoughts on that?
Pick wages is often what we call this, paid in kind or commodities in lieu of wages. It's a very good tactic. Even for your hired men, this is a good thing to be using, because you create a contract at the beginning of the year that says, hey, for your work, you're going to get this many calves, or you're going to get this many bushels of grain. And then at the end of the year, for all of their work that they provide all throughout the year, they sell those commodities and they get their checks back, or they get their funding at that point. With pick wages, we don't have to pay Social Security or Medicare taxes on those wages. So that's why the employer likes them, is because we avoid those taxes. And the employee doesn't have to pay those either. But that can be a good thing or a bad thing, because if you work under pick wages for your entire life, you never have a Social Security bubble built up. So I always recommend to at least get your quarters in. And you can talk to your accountant about different ways of doing that. And there's things that we can do in order to make that facilitate. So at least you get those quarters in so that you qualify for things like Social Security disability if something were to happen to you at a future time.
Okay.
So those are always the pull we're going to come across, is whether you want to pay the Social Security or the benefits, the Social Security or the benefits, because no one wants to pay that amount, but we all want the benefits when we're ready to retire. But the only way you can get there is by paying it. So there's a balance there, and everybody's situation is going to be different on this. So I've had a lot of people that said Social Security won't be there when I retire anyway. And I said, well, I don't know about that. These guys that are retiring now said the same thing, and they're
still there.
It's still there.
It's still there. Cory, will you talk about, so we're talking about Social Security now. Will you talk about the myth versus fact, Social Security with the tax situation on those benefits?
So with the one beautiful bill, the one big beautiful bill. Yeah. When we were building that, when that was working its way through Congress, everybody thought Social Security was going to be tax-free. They advertised tax-free Social Security all over the place. And there's still people that think that they shouldn't be taxed on their Social Security. That element never actually went through. That's where people got dropped off and not realized it. Instead of making Social Security tax-free, they gave an extra $6,000 tax deduction for people over the age of 65. So your Social Security is still taxable, but you get an extra deduction for being on Social Security. So that's their way of trying to balance it out a little bit. But if you go to your tax person thinking that your Social Security is going to be tax-free, you might have a rude awakening. Just so you're all aware of that.
Right. For sure. Make sure that you're planning and you're asking those questions and reserving some funds aside to know that it's just not coming to you completely tax-free. You're going to have taxes on that.
And the $6,000 is for both you and your spouse, so it can be up to $12,000 if you're married.
Okay.
And so it's a pretty good tax deduction still. It's just not what everybody thought it was going to be.
Okay. Another good nugget of information to have. Did you have anything else on Social Security, Cory, that you wanted to discuss from wages to tax benefits?
I did want to talk about paying children. If you are a sole proprietor or a partnership that's just you and your spouse, then you have the ability to pay your children. And when you pay your children, you don't have to pay the Social Security and Medicare taxes on them. So it's one very good strategy of transferring income from you to your children. And then your children can put it into a Roth IRA or save it for college or whatever they want to do with it. But you can pay a child up to $15,000 without having to file a tax return for them. Let me rephrase that. The child can earn $15,000. So if they have a summer job, you might want to decrease the wages a little bit too for that. But they can make $15,000 before they have to pay any taxes at all. So you can get a $15,000 tax deduction, pass it on to the kids, and the kids won't pay any taxes. So it works out really good that way, especially when a lot of times we're talking about self-employment income. So a regular Schedule F farmer will have this self-employment income. And so they're getting a very big tax break by paying their children.
When they pay them, do you recommend that they have to keep track of duties or like some sort of time card?
Yes, I do. Because you can't just pay your children just to pay them. They actually have to be earning these wages. And so you can't have a 1-year-old and pay them $20,000 because or $15,000 just because you want to get rid of the fund. They have to actually work for that. And on a farm, I don't know about farmers these days, but when I was a kid, I was moving equipment when I was 8 years old. I was driving a rake, I was haying, I was doing all kinds of things at young ages. So you can pay your children for those services. And you just have to come up with a reasonable way of paying them. I do recommend having some type of a schedule that shows the hours that they worked. So if we're ever challenged on this, we can say, hey, here's what we did. Here's how much we're paying them and why we're paying them. One more thing about children is if you pay them after they turn 18, then they are subject to Social Security and Medicare.
Okay. Because then they're not minors anymore.
Right. If they turn 18 in December, you can pay them all summer long, just not after their birthday.
Okay. So then would they figure out, let's say they turn 18 December 10th, then you would take the last 21 days of the year?
I would suggest not paying them for that 21 days.
Just not pay them. Okay. All right. Very good. We're getting close to the end of our time for today's episode. Cory, anything else that you want to add in for these topics that we've talked about today?
Oh, I've got all kinds of information for you. I really want to keep going, but I understand about slowing things down and taking a break. I really think we should continue this another time.
Okay. All right. Very good. All right. Well, thank you so much for being on our podcast today. We're going to step away for a minute, and then next week, join back with us as we get to the second half of my conversation with Cory. Cory, if listeners want to reach out to you, how can they connect?
The best way is to call my office. My phone number is 406-433-4510, or we can be reached at admin@weeby.cpa. And we'll have links to this on your website, correct?
Yes. I will make sure that those links to your website and your contact information will be in our show notes below. So that way listeners can click right on that and get into being able to contact you. So, okay. All right. Well, very good. Thank you, Cory, for being a guest on the podcast today. I hope this has been enlightening for all of our listeners. There's things that you need to be thinking about as we enter into the end of the year and our tax season. So just keep listening, and we'll see you next week. Until next time, I'll see you between the ditches.
Thanks for listening to the Pathfinder Legacy Podcast, where your future is our focus. Be sure to subscribe, follow us on social media, and visit us at pathfinderlegacy.com to start building your transition plan today.